Imagine walking into a bank and asking for a loan. The banker smiles, checks your information, and says, "Congratulations, you're approved." You walk out thinking, "The bank believes in me." But what if I told you the bank isn't making money because you borrowed? It's making money because it knows exactly how people behave with money. And the biggest secret isn't hidden in your interest rate. It's hidden inside a financial system almost nobody notices. Once you understand this, you'll never look at banks the same way again. Banks don't build billion-dollar businesses by helping people become rich. They build them by moving money. Every dollar that enters a bank is expected to create even more dollars. Your paycheck, your savings, your credit card, your mortgage. They're all pieces of one giant machine, and the more money moves, the more banks earn. Your money is always working. Most people think their money just sits safely in a bank account, but that's not how modern banking works. When you deposit money, the bank doesn't lock it inside a vault waiting for you. Instead, that money becomes part of a much larger pool. From that pool, banks make mortgages, business loans, auto loans, and other investments. That's why banks encourage deposits. Your savings become part of the engine that generates income. Meanwhile, you earn a small amount of interest, while the bank may earn much more by putting that money to work. The bank isn't just storing money, it's constantly managing the flow of money. Time is the product. Here's something even more interesting. Banks don't really sell money. Money is everywhere. What they actually sell is time. Need a house today? The bank lets you use tomorrow's income today. Need a car now? Same idea. Need to expand your business? Again, they're selling access to money before you've earned it. In return, they charge for that access. That's why borrowing isn't free. You're paying for the ability to use time. The longer the repayment period, the more valuable that time becomes for the lender. The system rewards knowledge. Here's where many people get confused. Some believe banks only profit when customers struggle. Reality is more nuanced. Banks generally prefer borrowers who repay consistently because reliable payments reduce risk and create predictable income. At the same time, people who understand how borrowing works often use credit strategically. They compare rates, avoid unnecessary interest, maintain strong credit histories, and borrow only when it supports a meaningful financial goal. The difference isn't always income. It's often financial knowledge and decision-making. Understanding how lending works can help you make choices that cost less over time. So what's the secret banks don't advertise? Money itself isn't the real product. Movement is, time is, knowledge is. The people who understand these ideas stop seeing banks as mysterious institutions. They start seeing them as businesses with incentives, rules, and systems. And once you understand the system, you can make more informed financial decisions instead of simply reacting to it. Because the biggest advantage in personal finance isn't having more money. It's understanding how money actually works, and that's a lesson worth far more than any loan.